users in America. More than half active credit card users in the US actually are carrying some kind of balance or debt. So when we say are carrying a balance, it means that probably you get a credit card, you've used it, but you've not paid everything, right? And so you are in a way carrying a balance that will incur interest. That's what they mean. And so that's different from this survey is different from people that are carrying balance and they make payments at the end of the month. It mainly looks at people who have like balance over a month or so, or interest accruing balance, which is quite concerning because then, I mean, it's about 56%. So yeah, which makes this thing. So I'll start by explaining what credit is. I mean, credit, I think we all know, but then a quick synopsis about it. So credit is basically an agreement between a borrower and lender that allows the borrower to actually get funds, goods, or anything with the intention of paying at a later date. So basically anything that you, sorry?
Charlie, if anything, maybe
Okay.
anything else.
So anything you enjoy without necessarily paying at that moment is called credit. There are advantages of credit. It's very convenient because probably you need money, especially with our credit cards. I actually encourage people to get credit cards because it helps you build your credit score. And we'll go deep into what credit scores and all that are. But it's convenient because then you go to the grocery shop and you don't have a lot of cash at hand. I mean, even if you have a debit card, usually most grocery shops or shops will require you to enter your password and all that, right? Your PIN. But then if you have a credit card, you don't need to even remember your PIN and all that. So it's quite convenient. It's also used for the emergencies. I mean, you get somewhere you're stuck, you don't know what to do, you don't have money. At least if you have your credit card, it can bail you out. So that's good. It also helps in holding for reservations, whether hotel bookings or flight or anything. It's also makes you purchase things that are really expensive early that are beneficial. So probably maybe someone wants to buy a TV that costs maybe $1,000 or $2,000. The person that doesn't have that kind of money at the moment, but it's kind of expecting money maybe 2, 3 weeks later, but then really wants that particular thing. So with a credit card, you can enjoy it and get and then pay later. And it's also, I mean, the obvious one is eliminates the need for carrying large sums of money. Back in Ghana, we know how cash transactions are kind of, they form a higher percentage of all transactions in the economy. So having a credit card makes it easy. But then there are disadvantages. That's the thing. And that's what I think a lot of people have. So interest paying, additional fees, and the temptation to spend. Because then when you don't have, when you spend money or you easily get access to money that it's not yours, most likely you will want to overspend. And so the credit card money generally is not your money, but then since you can easily use it without anyone questioning you, asking you a lot of questions, it's leads to the likelihood of you spending more because I mean, oh, I can buy this, I'll pay later and all that. And that overspending, you later in our understanding, you realize that overspending is actually one of the canker that leads to that affects our personal finance or building wealth. And so yeah. And then it causes, I mean, large amounts of debt, which we already know. And sometimes it leads to identity theft. This is kind of dicey because later in the presentation, you get to know that credit card is relatively safer compared to like debit cards because, and that is why I said I encourage people to get credit card over debit card because usually when we know about identity theft, we know about fraudsters, like we at least we've heard of fraudsters using people's credit card to make purchases and all that. When you are using a credit card, actually you can dispute a purchase, and the credit card company takes the risk and will take over the case, and they will reimburse you literally everything that you was taken away. But then when you're using your debit card, the bank will try, but most likely you may not get the full amount, or sometimes in some cases you wouldn't even get anything. It's highly encouraged that you use credit card because of this identity stuff. But also people steal people's credit card, and there's identity thefts and all that. So yeah, basically that. Now, what is a credit card then? So I explained what a debit card is, but then I want us to go deep into what a credit card is too. So a credit card is a loan that is based on the character and the reputation of the person that holds the card. And so it's basically like a debit card, but this time around, the money on the card is not for you. Actually, it's not your money. It's a credit line that has been given to you. It's when you say a credit line, it's more or less like a loan given to you. And so back home or even here, if you have a debit card, with the exception of having overdraft, I mean, you should have money in your debit card before you can use it, right? But then if you have a credit card, you can use it without using your own money. So that's the difference between what a debit card and a credit card is. And yeah, I think I explained it. And so um it's a revolving credit, as I said. So it's more or less like a line of credits. You use it, someone gives you the money to a certain limit. So I think for students generally who are in the US, when they apply for their credit card, usually most of them apply to Discover also. So usually give them like $2,000, and the intention is that that credit line is there. You use a part of the money and then you repay it and then you use it and things. That's why it's called revolving, because then it's always there. You can use, pay, use, pay, use, pay. Yeah. So that's the meaning of that. And then, so how does it work? So, as I said, it's a line of credits, but then charges are billed on a monthly basis. And so, let me use the example of the students again and the $2,000 thing. So you get a credit card of $2,000, and then probably you spend throughout the month, you spend like $1,000. At the end of the month, you have to pay the $1,000. And so that's the rationale of it. And how it works is that depending on when you started, you have a cycle. So your payment cycle, it could be any time in the year, depending on when your credit card was approved and when you started using it. But then generally, the payment is due in about like 25 days from when it shows. And so for, let's say, Discover like this or any other credit card, you use it, and then let's say after every 18th of the month, you get a statement, right? So what they do is that they tell you that, okay, this is your statement, and then they give you some time. So you don't have to pay it on that day. They tell you that, okay, in the next 25 days, you have to pay. And usually they give you something called the minimum amount. And so you have to pay at least, let's say, $50 or $100. And if you don't pay, then that's when they will say you've defaulted. So you don't necessarily have to pay everything, but at least you have to pay the minimum amount. And so that way, which is very, very key in the management of your credit card. So yeah, there's so then we transition to like minimum payments. And so I'm pretty much sure most of us who have credit cards here have heard of minimum payments. You have to pay minimum payments. And the trap about this is again, let me use the example of the $2,000. You buy something for you have a credit limit of $2,000. You spend, let's say, 1,000 in the course of the month. And then funny enough, they tell you that, oh, you don't have to pay all the $1,000. You just have to pay $50 and then you're fine. Or you just have to pay $100 and then you're fine. Um, and then because most of us are not used to it, we think, oh yeah, I mean, I think I'm on top of my destiny. I can use it, and then the money I can use it for another thing and all that. But we should understand that our credit balance or the debt on our credit is actually debt. It's not like the credit card is there and it's free money and you use it. And so whether you pay the minimum payment or you don't,
Did you say therapy?
you end up owing the credit card company,
Yeah,
and then you have to eventually pay. The funny thing about this minimum payment is, so people ask whether it's good or bad. It depends on you. I feel like it's bad paying your minimum payments, especially if you you have um you have the means to pay everything. Moreover, too, I know for most credit companies, the moment you get approved for the credit card, they give you, some give 6 months, some give 12 months, some give 3 months free credit, interest-free credits. So what it means is that so maybe if, let's say, if they've given you 6 months, so between the time you were approved to the next 6 months, regardless of whatever debt is on your card, so far as you pay your minimum payments, you make your minimum payments, you don't incur any interest, which is fine. But I always advise people that if you really have the means, pay it, because that's how debt piles up. You have debts, it's small, you accumulate it little by little, and by the time you see it, it has become a huge thing that you have to deal with. So do that. And so I give a small calculation here that your minimum, for us to understand the minimum payments and why I believe if you have the means and you have the ability to do that, like you have to pay off the credit card rather than the debit card. So one of the interesting facts is that credit card debt has one of the um, highest interest rates in all debts. Think about mortgage, think about student loans, think about even auto loans, I mean, your car loan and all that. Credit card carries one of the highest interest rates you can ever have, especially in America. And so, and I believe that's why maybe in Ghana, they don't give credit card to most people. I know 22% in America. Yeah, in Ghana it's nothing. I mean, that's the usual thing. But then here in America, we all know that if you are going for a loan that requires you to pay 22% of the amount, it means that assuming you don't pay anything in the next 2 or 2.5 years, the amounts that you have to repay back would have doubled. And so that's the main reason we should pay off our credit card balances. So I give us an example. If you buy a laptop, let's say $1,000 with your credit card, and given the current APR rate, I mean that's the average APR rate that I took from one of the credit card companies, and then it says 22% APR, right? You make a minimum payment of like $100 every time. It will take about 12 months to pay off, right? And by the time you pay off, that's like a year, just $100. So imagine you take yeah, imagine you take a debt of, or you use your credit card for 1,000. And then you said, okay, I don't have money. I'm paying minimum payments throughout 1 year. Within a year, it will take you 1 year before you pay that. And even if you pay that, you have to pay an extra $115 as interest on it. I mean, you wouldn't see it as much, but assuming someone who has, let's say, 10,000 or has spent 10,000 on this, it will be much more, right? And the same thing, if let's say your minimum payment is like $50, you see, it will take you over 2 months, 2 years, sorry, to actually pay off that small laptop debts. And we all can attest to the fact that within a year or two, a lot of things will come up, and we'll need debts, or we'll need some source of financing to like supplement our income or make payments or anything. And so if you have this debt outstanding, it can affect your credit score. It can affect easy access to your loans and all that, because obviously if you start piling up credit card debts, I mean, which we'll discuss later, you can see that it will affect how much like your access to like loans, like mortgage loans and auto loans and all that. So that's why I advise people to pay their full balance if they have the means. Yeah, and so I mean the reason for that is because of compound interest. So yeah. Yeah. So basically that if you make your minimum payments, and sometimes it becomes very tough, and then some people end up not being like paying the thing, and that will lead to judgments, because you have bad credit score. Some people, when they default on their credit card payments, it leads to wage garnishment. And so this is more or less like the court will order the credit card company to start deducting money from source, your salary directly from your employer. And so the way let's say child support works, that's the same way this thing too works. I mean, if you are not able to manage it well, and sometimes it leads to bankruptcy too. Now, how to get a credit card? You can get it from a bank, a credit union, a credit card company. There are various credit card companies around. There's Visa Card, MasterCard, American Express, Discover, Capital One, so many. Even various banks have it, so you can get it. But let us understand the fact that credit card is basically mostly based on your income and your credit character, right? So your credit score. And for a first timer, usually they look at more of your income, because then you don't have any credit score, right? But then if you've had credit card for long, they look at both. And so, yeah, basically that. And yeah, so how does credit card company know your credit character? So they get it through your credit score, credit history. So there's a difference between credit score and credit history. Your credit score is more or less like a numerical number that is associated with you to show your credit worthiness. Your credit history basically looks at how long you've accessed credit, whether credit card or any other form of credit or loan, and whether you've made payments or so. But I mean, they are not mutually exclusive. They go hand in hand. And so your credit history can affect your credit score. Yeah. Yeah, so basically credit score. And this is one of the reasons why we should manage our credit cards well, because the most common use this thing is FICO. Actually, there's another one, but then in the US, most people use the FICO score, right? And that's 90% of the lenders in the US, regardless of whether credit card company, auto loan, and things, most of them use FICO, right? And this credit score thing, it's a numerical value, as I said earlier on, to between 300 to 850. That is associated with a person, and it's kind of based on your score. It's kind of depicts your credit worthiness. So your score will determine which particular, like how good your credit worthiness is. Yeah, basically that. So yeah, basically these are the key factors that affects credit scores, right? We have the amount of debts. You have the length of credits history, you have the payment history, you have the new credits. Yeah, and we have a lot of things. So we have the credit mix, and so I'll go. So the credit mix is basically let me start with credit mix. So it looks at the different types of credit you have. So some people have credit cards, they have credit card debts, they have auto loan, and they have mortgages and student loans and various type of loans. And so that credit mix represents, okay, how many type of credits do you have? Is it really credit card? Is it that? And that affects like about 10% of your credit score. Now, payment history, which we can see that it affects about 35% of our of the FICO credit score. It looks at how often do you pay, and then do you pay your bills on time. And so, as I said, it's very good to make sure that it's very necessary to ensure that you pay your minimum, you make your minimum payments on time. Never try as much as possible never to miss your minimum payments, because the moment you miss it, I mean, it will drastically affect your credit score, which can affect your future prospects of accessing credits if you really need it. And then the amount of debts. So the amount of debts basically represents the percentage of debts that you have. So for a credit card like this, if you've been approved for like 2,000, the amount of debt, and you've used 1,000, the amount of debt is like 50% of your actual credit, of your credit limits. But in general, they don't really look at that, because they look at other forms of credit too. Sometimes the amount of debt you have on other credit cards too can affect you, and other things like other forms of debt too can affect the score. So let's be very careful in terms of how we use our credits, our debts, or like how we accumulate debts. And then the length of credit history. So basically, if the intuition behind this is that rationale behind this is that the longer you have credits, I mean, you have credit card, or the longer you've used your credit card, the better they know about you. Like, so most credit card companies or lenders based on data, right? And then if, let's say, the data shows that, okay, you've had credits for long, you make payments and things, it makes more sense to say that, okay, based on that, I'm predicting that there is a likelihood that you pay, because you've shown in the past that you've had credits and you've paid. But then if you just had your credit card, or you just started having the debt, I mean, whatever, any type of debts, it makes it difficult, even if you are quote unquote credit worthy, because there isn't anything that shows that, like, there isn't any past events that show that you actually will pay, or that gives them an idea of your credit worthiness, and that alone can affect your score. So yeah, sometimes you see someone who pays everything regularly but doesn't have a really good score. It's just sometimes it's just because of the credit history. And on this, I want to say that sometimes some of us to go for credit cards, and then we cancel it, right? The moment you cancel it, it affects your length of credit history. So let's say you have about 3-4 cards, and now you've realized that, okay, it's no longer working for me, and so let me cancel about 2 of them. And maybe you've had them for like 3 years. The moment you cancel it, it will affect your credit history, because then what you're saying is that they should wipe out everything related to that thing. And so they'll be basing your credit history on the ones that you are using now. And so let's be very careful on that. So sometimes, usually the best way to do it is not to use the credit card, put it down for long. When the credit, I think after a year or two, when the credit card company realizes that you're not using it, they themselves will cancel the card. And it's good for them to do that because if they do that, it wouldn't affect your credit score. But if you actually request that they cancel it, well, and then we have here new credits. Having new credits affects you too because the moment you get new credits, what they do is that they know your past history, but everything is new. Like, I mean, every new thing has some risk. So what if this particular new one, I mean, you default. So that's what affects it. Yeah, so this is a quick summary of what the FICO score looks like. I mean, exceptional is 800 plus, very good is 740 to 799. Good is 670 and 739 and all that. So basically that, but generally a good score is anything above, like, let's say 730 or so, or 700 and above. Yeah. But lenders, this will vary by lenders also. Now, yeah. So tips on using your credit card wisely. I mean, choose the right credit card for you because there are various credit cards. As I said, a bank can give you a credit card, a credit union can give you, financial institutions can give you, and the credit card companies themselves can give you, right? And even amongst the credit card companies, even with a particular one, there are various types of credit cards. And so, for instance, let's say you are using Amex, right? Um, Amex credit card actually Amex has a lot of credit cards actually. So there is one for businesses, the one for travelers, one for students, they have various credit cards for various range of people. And you have to understand what you want to do. Because let's say if you're a student, you don't travel often and you take the one for travelers. What it then means is that usually they have an annual fee that you charge. Because then if you're a traveler and you use that credit card, you accumulate a lot of points. But the bad side is that you have to make annual payments, more or less like a subscription. And as a student, do you have that money to do that? And so you have to understand which particular credit card is good for you. Understand the rates and the terms and conditions and the reward options. And then try as much as possible to keep the balances low. That's why I advise people to make payments that are more than the minimum payments, because then it helps you keep the balances low. Yeah. And then pay in full, which is always the best if you have the means, and make sure that you pay on time, because then paying on time affects your credit score. So yeah. And then keep accounts open and active. So if you have particular credit cards and all that, I mean, just keep them active and don't apply for, the last one is don't apply for credit cards that you don't need, which is very, very key here. So yeah. Yeah, so I mean, make 2024 the year you can tackle the credit card debt once and for all. And you can make a pledge to yourself that by the end of 2024, you will be credit card debt free, which is possible. Yeah. Thank you. I open the floor for questions. So
thank you so much, Gyimah-Danso. I think we had a question in the chat. It reads, what is your take on closing a credit card once it starts to accrue interest to get another one?
okay. I don't understand really the question, but then I'm guessing probably you realize that you're accumulating interest and maybe the interest is high. And so you want to move to another credit card that has a lower interest, right?
Yeah, possible.
Okay. Yeah, possible.
Yeah,
So
okay.
Sorry.
I was going to clarify the question. So basically, you had the credit card, you were given 12 months interest free, and then you use it till then. And then once it's on the 13th month, you know it's going to get some interest. So you close it out, get a new card that gives you like 12 months interest free again.
Okay, I get what you're trying to say. Okay, so what you mean by closing it out is you pay everything and then you move to another credit card, right?
Yes.
Okay. So yeah, I mean that's good, but it's not good in a way. Let me go back to the credit score thing, the credit. So you realize this, so they look at your length of credit history. I think when I was explaining it, the moment you close out that credit card, basically what you are saying is that all your credit history for that thing should be wiped out. And so if you go to a new one, it means that you don't really have good credit score. Yes, you can enjoy the first 6 months thing, but then do you really want to continue on that trend? Because probably you want to get a mortgage, right? Or you want to get maybe auto loan or something. If you continue on that trend, it means that that will affect your credit score. And if that affects your credit score, it affects your access to other types of credits. And so, yes, it may be good in the short time, but in the long term, it wouldn't really help you. So that's why it's very good to like research on the type of credit card you want, stick to it, and then, yeah, move. I hope that answers your question, or if you have any follow-up questions.
No, that helps. Thank you very much.
Yeah, you're welcome. Yeah. I can see someone raise their hand. Or are there any questions in there?
Thank you. I appreciate you being here. In some cases, though, I've noticed that some people do balance transfer, especially when they have so much balance, the interest is accruing, and they are digging a deeper hole. In the interim, for some people, they do balance transfer to buy them time in order to pay back the debt. What is your take on that? Instead of closing it out completely and taking another card, I think the option would be a balance transfer to buy you some time. So if you can, your take on that and maybe a little addition. Thank you.
Yeah. I mean, that's a good thing that you mentioned. And so most credit card companies, and particularly the pure credit card companies like Discover, Amex, MasterCard, Visa, most of them have what we call the consolidated balance. And so what they do is that probably maybe you came here, you didn't know much you weren't really educated about the credit card system, you were misusing it and all that, and you accumulate a lot of debts, right? And so different credit cards have different interest, and realize that you have a lot of debts with a high interest in some cards. What's our advice is that start looking at one particular credit card company or credit card that has good interest. Then, as she said, transfer balance. But I mean, usually the technical term they use is consolidating. And so what they do is that instead of you paying different interests everywhere and on that balance, you can talk to the credit card company. They transfer that amount from the other credit cards and consolidate it to the one that you want to use, which is usually the one that has lower interest. And when you do that, it makes it easy because right now you know that everything is consolidated at a point, like at a particular place. And so if you are able to gradually clear it off, it will go a long way to like improve your credit score. So that is a good idea. And I think I advise a lot of people to do that, usually when they are stuck into debt and they don't know what to do next also. Yeah. Any questions? Yes.
I think I have a question.
Okay.
How about you got a credit card, it got closed out, and even though the history doesn't carry over, perhaps you had missed some payments on that card. How does that play into your credit worthiness?
Okay. Unfortunately, the moment you miss your payments, it already affects your credit score. It's already there. And unfortunately, they always pick the bad side over the good side. That's the thing. And so if you've missed your payments, it will show off like when they are digging deep, when they are making inquiries about your credit history, it will show up. And they will see that, okay, you closed it. To the lender, what it means is that, okay, you missed your payments and then you intentionally closed it. And so it will affect it. But it is good that you've closed it. The thing is that it has happened. You can't do anything about it. What you need to do is to look into the future and make sure you are very dedicated in paying your balances. And so, yeah, it may affect you temporarily, probably maybe, and it may take like months to years, like a year or two. But then after some time, it clears off. And so you still have a chance. It's just that it will take some time before it clears off. Yeah.
Thank you.
You're welcome.
I also do have a quick question again. So
Yeah.
can you please go over how the credit score is done? Because sometimes I get confused. Like I pay my bills on time and all that, but one thing I've realized is that for some months it goes a little bit down and other months it goes up, and I'm not so sure what goes into it.
Oh, got it.
So I don't know if it has to do with me making multiple payments or whatever is happening.
No. So I mean the time you make payments to can affect you. When you make payments before the year, so just so you see, I told you that the charges are billed once a month, right? If you make payments before the statement cycle, you still have a minimum balance. That's one. The second one too is interest rates. Now, unfortunately, the interest rates for credit cards are variable. So what we mean by variable interest rate is it will tell you maybe 20 plus something. Now, for the past 2 years, the US in particular, we are in a cycle of high interest rates. I don't know whether most of you have heard, but because of inflation and everything, you hear that maybe sometimes they talk about Federal Reserve increasing interest rates. The moment they increase the interest rates, it affects the interest rates that lenders charge. And so the moment interest rates are increased, the interest they charge on your balances to increase. So credit cards are not like, let's say, mortgage loans that are fixed. Most of them have fixed interest rates. So mortgage loans, you know that if you take a loan right now and they tell you that, okay, the interest on the loan is like 6%, I think now is 5 or 6 or so. But let's assume it's even 5, right? Regardless of the economic conditions and whether the Federal Reserve Bank increases interest rates, it will never affect you. But with credit cards, it will. And so I'm sure this thing that you are talking about happened in the past like year or two, which the Federal Reserve have been increasing interest rates. And so, yeah, that can affect your interest rate. That's why if you want to avoid interest rates, paying high interest, I advise that if you have the money, please pay. Make that payment. And I know sometimes it sounds so impossible for us to pay off our debts like that, because you feel like, oh, if I pay off my debt, I'll not have anything to do. But if we cast our minds back to when, let's say, we were in Ghana or so, or whichever country you're coming from, especially if it's outside a Western country, we survive without like credit cards. It's just that you have to be very careful. If you don't have the means, try as much as possible to pay above the minimum payments so that it reduces your interest rate. Because the interest, this minimum payments calculations that I did, if you accumulate, let's say, $1,000 and an interest of, let's say, $50 adds up that month. If you make a minimum payment of $50, you've really not paid off the principal, right? And so you realize that you are making payments, but the thing is it's not like there is no progress. Moreover, if the interest rate increases, it means that even though you are making the payments, the actual balance is even increasing because the interest has increased. So that's why I usually advise people to make payments greater than the minimum payments. Yeah. I hope that answers your question.
Oh, sorry, I was trying to get myself off mute. Yeah, it answers part of it, and then the other part is with the credit score itself kind of fluctuating.
Okay, the credit score itself is fluctuating. And so you say make payments and then you don't get. So back to the cycle statement I was saying. Your credit card is billed every month, right? Let's say I just cleared off let's say every 18th is when my bill comes. I bought something on the 1st and immediately I paid on the 1st. And then probably, sometimes when you buy things, it takes like a day or two, 1 or 2 business days before it actually reflects, right? Even though it will show as pending on your credit card statements, it will take a day or two before it shows as fully there, right? And so if, let's say, just before the credits statement cycle, which is, let's say, 18th, you made payments and maybe you bought things and maybe you plan on paying it on 19th or 20th. What it then means is that on the as of 18th, in their books, they see you carrying a certain type of debts, like they see you carrying debts. And mind you, one of the things that really affects our credit scores is the amount of debt, which forms like 30%. So if from their side, they are seeing that you carry debts, but for you feel like, okay, I'm paying just a day after, it may affect your credit score as of that day because the credit score doesn't change every day. Usually, they give it to you maybe every month or every 2 weeks or so, depending on the type of credit card you have. And so that could have affected your credit score. And so make sure you make payments or you pay the moment you see the balance, right? And make sure that you pay more than your minimum payments, which I see a lot of people do. And also, sometimes it's not only that. Make sure that another thing too that could have affected this thing is credit mix. And so probably you make all your payments on your credit card, but maybe you just got a car loan or you just got a mortgage. It will feed into this because the moment they search for you, they type in your thing, they will get it. And you have to understand that car loan or car thing or mortgage is a new credit. So it then will affect the new credits. And that one too has a very short length of history because you just got it. And so that one too will affect you. So it's even already affecting 3 factors already. And then that will affect your amount of debt in total, which will affect like about here, we are looking at like about 4 factors already. So those things too can affect your credit score. Yeah. I don't know whether you have like further questions.
No, that was great. Awesome. Thank you so much.
You're welcome.
Yeah, thank you. But I wanted to ask this question: how advantageous it is to add another user to your credit card? In terms of the credit scores and the credit history, would it impact both persons on the card equally, or you would recommend the two individuals getting their separate credit cards?
So it depends, but generally it is good to add someone to your credit history, especially if maybe the person is your spouse or the person is someone that you know very well that will make payments and all that. Because what it does is, let's say if it's your spouse and you add your spouse to your credit card, right? Most likely your credit score already that you've built kind of transfers to him or her, right? And so that person wouldn't have to hold a credit card for like 1, 2 years or 3 years before building a good credit score. So far as you are making the payments, you are making payments on time, you are clearing your debts and things, it affects that person too. And so that person too will have a good credit score. And that will improve your credit score, like overall. But if the person doesn't really make payments and you don't really trust the person and it's hard to make the person pay, you have to know that you will also be affected. And that's it. But generally it helps. Like it helps if the person makes payments on time. Yeah.
Great. Thank you very much.
Okay.
All right, we'll take the question from Lady Talata. Her hand has been wow.
Praise the Lord.
Hallelujah.
I am so much enjoying this presentation. I want to say disclaimer, I'm not a financial expert. But from personal experiences over all these years, our brother is saying everything spot on, and I'm so much enjoying the presentation. What I want to add on is that managing your credit card takes diligence and vigilance. There are two main dates from personal experience that you need to be mindful of. Your minimum payment due date and your cycle end date, just like our brother mentioned. If you make your minimum payment a day after, let me use the 18th that he was using, the 18th. What it means is that it would decrease your debt ratio on the card, but it will not go towards your principal and your interest. So at the end of that cycle, not only have you defaulted, you have an interest on the money that you've defaulted on again. So you will make double the payment, but then you realize that your principal will not go down, but it will rather go up. So you have to be vigilant on those two dates, your minimum payment due date and your cycle or statement end date. Over the years, the strategy that I have developed and I want to share with everyone is that I have diligently taken note of these two dates. So for instance, if I know that my payment due date is on the 18th, and let's say the date is around on the 15th, I suspend using the card. I wait till the closing of the cycle date, let's say 23rd, and then I know that I have 2.5 weeks to put back the money on it before the due date and the closing end date. So that has been my strategy. So just be vigilant. Don't go about swiping the card simply because you have it. Be vigilant on those two dates. And remember that the money is not yours. You have to pay it back. But it's not just about paying it back. It's about when you pay it back. That is where the secret lies. When do you pay it back? And if you accumulate so much debt, they are looking at the debt versus your income ratio, which is also a factor influencing your credit score. So the fact that you have the ability to go get a car, get this, get that, doesn't mean you have to. Because every debt is calculated against your annual income that is coming in. And that is where you get your income debt ratio. So if you're going to borrow, the bank is calculating your risk of default or payment based on your income debt ratio. Thank you.
Yeah, thank you. That was spot on. So yeah.
We'll take that question from Brother Atukwame now.
Yeah, thank you so much. I just wanted to ask the question again, the one Pastor asked. Are you saying that if I add my wife to my card, automatically she gets the score I have? Is that what you're trying to say?
Yeah, so she doesn't have to build the credit score from scratch. She wouldn't necessarily maybe get everything that you have, but will get a good credit score because of you, because she is more or less using your credit and you already have the history. And so it's like more or less like kind of the history has kind of been transferred to her too.
Oh,
Yeah.
okay.
Yeah, so that's good. But the risk lies on whether she makes payments too, because then it will affect you.
Oh, okay. So you're saying she gets her own card.
Oh no, I mean I said generally it's good if she does it with you. I mean you add him or her to your credits, this thing, right? But then I'm saying that on the other side too, because then I'm talking about two sides. On the other side too, when she doesn't pay, it also affects you. Because then it's like the thing is on your name. Do you get what I'm trying to say?
Yes, sir.
Yeah. So but generally, because maybe the person pays and everything, it will benefit both of you, because she will also have like a good credit score without necessarily having to build it from scratch like that, tirelessly like that. Yeah.
All right. One more thing, please. I've heard people say they use credit card to make money. Any advice on that? How can I use it to make cash instead of rather making profit?
I don't understand the context. Like if you can give me a context, I will be very glad to,
so
like,
especially with the issue of I think cashback or something like that. But
okay,
I think there are more than just cashback.
I mean, cashback is fine. So I mean that's the good side of credit cards here. You can get cashbacks, right? But I ask myself, if you get cash back and you don't pay, then it doesn't make sense, because then you're accumulating interest, which would be more than the cash back. And so you can do it. Now, I think I mentioned early on in my presentation that there are different types of credit cards. That's why I use Amex, for example, right? They have American Express, they have different cards. They have some for students, some for workers, some for travelers, some for business people, and all that. Now, let's say if you travel a lot, having the credit card for travelers really helps, because then you will get a lot of bonuses in terms of points, like hotel points, flight points, like different types of things. And the cashback will be a lot. Discounts on things will be a lot, right? But you have to pay an annual fee. Are you willing to do that? If you get a credit card that's meant for students, yes, you get cashback, but really, really, it wouldn't be like the travelers one. And so the cashback depends on the type of credit card you have. I don't know what they mean by I use credit card to make money, but one thing I know is that take advantage of the first few months of free interest-free period. Like the interest-free period really helps, especially if you are really in need and you don't have the money, you know that you're not expecting the money in the next 1 or 2 months, right? Usually some people, I think some credit card give 6 months or so. By saying that, I'm not saying that you should then go and get new credit cards and things just to enjoy that. But I'm saying if you get a new credit card, make sure you utilize it, because that one, when you're making minimum payments, to some extent, it makes sense, right? Because you're not incurring any interest. But the only issue is that people who do that, they lack the discipline to actually pay it. Because then by the time they realize they've accumulated a lot of debts. And so now the debts become so huge that they can't even pay it. And it reduces, it eliminates the essence of you actually utilizing that. So yeah, I mean, if I get a context, well, I can address this thing fully, but that's my take on that.
Yeah, I think that's well said. Please, one more thing. Sorry, apologies for the too many questions. So I started with Discover, and then so that's my oldest credit card.
Yeah.
Then I moved on. Then I added Capital One, and now on Amex. Yeah. Now the goal is I want to really increase the total amount I have in there. However, I would need to cancel one of the credit cards, and Discover and then Capital One seems to be the oldest. However, they are too stingy in terms of asking for higher amounts. What's your advice in terms of letting one of these old ones go, and how would it affect my credit score?
Okay. That's not an advice, but that's my view on it, right? And so first of all, you have to ask yourself, why do you want the cards, right? Because you are saying that you want to increase your credits, this thing. I know that Amex has a lot, like they give a lot of this thing, right? But then if you need it for a particular project, do you have a bank or a credit union or a local bank that you deal with? If you bank with such people, believe you me, I think going for a loan there will give you lower interest rates than a credit card debt. And so the most important thing is you have to ask yourself why you are doing that. Now, if you just want to eliminate those cards and stick to only one, that's understandable. The only thing is that the moment you cancel those ones, it will eventually affect your credit score. If you're not really using your credit score for something serious in the next few months, I don't think it should be a problem. Because then I think after 3 months or 6 months or so, it will go off, right? But then if, let's say, you're thinking of buying a house, buying something, right? If you cancel those credit cards, and then the next month you want to get a house, obviously the thing will affect your credit score. And so even the mortgage loan that you are going for, they will limit the amount they will give you and also increase the interest rates they will put on that mortgage loan. And so these are the things that you need to be thinking through to make sure that you make the right decision and not necessarily canceling it. Now, if you just want to cancel it because you have so many credit cards or so, and you still want this thing, make sure that you still want to go in for, let's say, mortgage or another this thing the next month. Just make sure that the balances in those accounts are zero. Put your card somewhere. Stop using it for like 1-2 years, some years. The credit card company will actually cancel it if they see that your credit card is inactive for some time. The good side of that is when they cancel the credit card, it doesn't affect your score. But then when you go to them and tell them cancel it, it affects your score. So you have to weigh that. But I feel like if you don't have anything, if you don't need your credit score to do anything substantial in the next few months, you can just cancel it, because after some few months, you can still come back to your original destination. Like if you are doing the payments and you're very diligent with it, with whatever you're doing. Yeah. Yeah, I hope that answers your question, right?
Yes, sir. Thank you so much, sir.
You're welcome. Bye.
We'll take the question from Brother Thomas in team.
Yeah, my question, by the way, thank you for the presentation. That was very nice. And my question is, if one decide to stop using the credit card and focus on paying the debt on it, especially paying the minimum payment, does it have any impact on the person's credit history?
No, I mean it doesn't really have much impact because so long as you're making the payments, the credit card is active, right? Because there's a transaction. Think of it as you have a bank account, right? Yeah, you've never withdrawn from the bank account, but you always put in money there. Is it not active?
Yeah,
it's active. Yeah. So it's some form of this thing of credit history. So far as like you are active and you are doing that. Yeah.
Thank you.
You're welcome.
I think I have another question. If you have a negative report, such as like a delinquency on your report, is there a way to write to the lender or the credit reporting agency, especially when you have taken care of that outstanding debt, for them to take it off your report?
Oh, so if I get a question correctly, you are saying that you had a delinquency report like issue, and you've already addressed it, but it's showing up in your credit report, right? As you're delinquent to this thing.
Yes.
Okay. In that case, first of all, tell them that you have to call them and be very candid with them that they change it. If they insist, you have to sue them, because I know someone who did that actually, and he sued them. The credit card company had to like compensated him, and they ended up removing it. Most likely they wouldn't want to go through that route, but if it wasn't your fault and it was their fault, they need to remove it from there, and you have to ensure that they remove it and it doesn't affect you in any way. Yeah.
All right, thank you. Do we have any other questions, please? Okay, so at this point, we'll call on Pastor to give us his closing remarks.
All right. Thank you so much for an amazing presentation. And thank you, Sister Bridget, for emceeing the program. I believe that all of us have learned a lot. And, the goal of this family series is to enable us to be on top of things. So that as believers, we don't find ourselves in situations that impact our well-being, and in the end impact, our ability also to fellowship with other believers. And on behalf of the church, I want to really thank our speaker for today, our brother Patrick Gyimah-Danso, for coming. And I learned during our interaction with him that he's an apostolic, and he'll be visiting us. I think I had the last conversation I had with him. He will be stopping by the virtual church to fellowship with us when he gets the time. I thank you so much. And by extension, I also want to thank Sister Akushika, because she was the one who
I think Pastor got kicked off. Lady Talata. Please, would you like to take over?
I'm sorry, I just got to work.
All right, no worries. So we'll wait for Pastor to come back.
It seems the Giato's hand is up. Is he having question?
Deacon Danso, please, do you have a question or do you want to take over?